Hi, welcome to Annual Report Analysis. Topic number one, how to figure out how much capital has been invested in the business and how much the business has earned since its inception. So today's case study is fuel cell energy. Okay. This is a US publicly traded company, we can get all its annual reports through the US Securities and Exchange Commission. It is sec.gov. Okay. So here, if you go to the website and you click on filings, and then you come down and you go to search for company filings here, and you put the company name. So in our case, it's fuel cell, and it pops up. You just click there. And I like the classic version. I go here and then I type 10K because we're looking for annual reports. So the report type is 10K and you click search. Okay, so now you see all the annual reports since the company went public. So here, this is where you can see since 1997, when it filed the first time, since it went public till the last one it filed in January this year. Okay, so let's go and click on the documents. Okay, and you come down here and you click on the first link, 10K. Okay, it says like this. Now here in this 10K report, there is a lot of information. What we are interested is the balance sheet. Okay, so we can go down and we can actually go directly, because I know I've gone through annual reports many times. It's consolidated financial statements. So in that section, you get that. But you can also scroll down and look for the balance sheet, and you have to look for consolidated balance sheet. Okay, here, so obviously all amounts in thousands except per share amounts. Here it says that. And this is ending October 31st, 2020. So you have to go down. So balance sheet has assets, liabilities, and equity, right? So you have to go down and look at the equity section. So here, something called additional paid in capital. So here you can see ending October 31st, 2020, this shows the investors put in $1.3 billion. Okay, and the accumulated deficit is $1.1 billion. That means since its inception, the investors have kept putting money, and the total amounted to $1.3 billion. And the overall, the company has just been making loss. Okay, now if you want to figure out how all this has happened, you can go and look at each annual report from 1997 and get the breakup of how that has happened. Now all that can also be found here. There is another called consolidated change of equity. What it shows is how the equity changes. Okay, so let's look at, since its inception, how that has happened. Now if you go here, this is, I already actually got all this so that we don't have to waste much time. So this is for in the year 1997, when it first went public. I pulled up. So this is the addition change in equity, the statement. Okay. Now here it shows in as of October 31st, 1996, they had 5.8 million shares, and those shares had generated $11.1 million. So the company had got $11.1 million, and it actually had made profit by then, 2.2 million. And then what happened is they made a little loss that year of 425,000, and then and they also generated a little bit more money. So here you see they have 6 million shares outstanding compared to 5.8 million. So they kind of, you can see this has increased and this has decreased because they lost some money. So if you do 2284, sorry, they actually made a profit. I'm sorry. So they made a little profit of 425,000. So if you add all both of them, 2284 and 425, you get 2.7 million. Okay. Then what happened is in the year 1997, they actually lost $382,000. So 2709, if you take out 382, you get 2327. And they also generated some more money from the investors. So they have 6.1 million shares outstanding. and 6.1 million shares generated 12.9 million. So like that, uh, so then in the year, so that is as of 1998. Then in the year 1998, they they had to transfer some assets to another company, and they also made a loss. So they took out some money from whatever they had earned. So if you take 2.3 million and you take out 669,000 and 985,000, you're just left with 673,000. And in the meanwhile, they kept increasing. So here you can see in its earlier years also, so it has kept increasing the number of shares outstanding and kept generating. So what it means is they are issuing more shares and they are generating capital, and they are making loss. And what happened is, so this is year ending October 31st, 1999. Then I went and saw that year's stockholders equity. So from 1999, you see till 2002, what has happened is there are 39 million shares outstanding, which has generated $339 million, and the net loss has become 68 million. How has that happened? Because from 673,000, they made a loss of 4.4 million. So this, if you do the math, the net loss is $3.7 million. Okay. Then in the year 2000, they made a loss of 15 million. So 15 million and 4 million, the net loss became 19 million. In 2001, they made a loss of 48 million. So it became 68 million. So like that, you can keep going and keep tracing how much. So obviously, the format changed in the year 2003 because the regulatory requirement also changed, and they had to showcase more things. But here still, if you just keep your attention to this place, accumulated deficit and shares of common stock and additional paid in capital, you can see from here they again had $340 million, and then again they had 424 million. So they kept increasing. So they're going back every year. So for since 1997, they keep going back to investors, and they keep asking for more money, and they keep making losses, and these losses are accumulating. So one from 135 it went to 221 million, and like that. And so if you keep going for each year, I've pulled up, and you can see here by 2005 it is 293 million. It has become 369 million 2006, 531 million by 2008, and then 2009 it became 599 million. To 2010 it had become 656, 655 million, like that. And then by finally here you can see by 2017 it had become 943 million, the accumulated deficit, and so they had generated $1 billion, and they kept doing that. And then finally our last one, what we have information is, as of October 31st, 2020, they had generated $1.3 billion from the investors, and they had made a loss of $1.1 billion. So what is happening is the company, since its inception, since it went public, it has kept making loss, and it has kept going back and asking for more money. Again, that's the nature of business. Uh, but this is something that, if you are trying to invest in this company, you should know, it's pretty rare. Like, think about it. Since its inception for 23 years, the company has kept making loss, and the overall loss that it has made is $1.1 billion, and the only way it's surviving is by generating money from investors. So hope you found this video useful. So if you have any questions, please give me, you can email me at annual report analysis at gmail.com. Okay, so that's my email. So you can email, and I'll try to answer any question you have. Thanks, and have a nice day.